Ever wondered what really drives the stock market's upward momentum?
That's a great question. Today, we have insights from top analysts like Emily Brown, Michael Every, and Peter Schiff, who dissect the forces at play in today's market.
We've harnessed cutting-edge AI to condense their crucial insights into easily digestible segments that save you tons of research time.
So stick around. Up first, Emily Brown tackles 3 key reasons for the stock market's impressive performance today.
And don't miss Michael Every, who'll shine light on the underestimated geopolitical risks investors are facing.
Finally, Peter Schiff shares his bearish outlook on the economy and offers survival strategies for the savvy investor.
Let's delve into the current stock market trends with insights from Emily Brown.
Emily attributes the market's success to investor optimism and the impact of government policies.
Emily Brown highlights that renewed investor confidence is a key driver.
This is significantly shaped by encouraging economic forecasts and stimulus initiatives. Emily points out the significance of government stimulus for market liquidity.
The resultant capital influx supports both consumer spending and stock investments. What key indicators does Emily reference regarding economic recovery?
Emily observes that recovery in job numbers and corporate growth is crucial for market positivity. While confidence is high, Emily urges caution regarding potential pitfalls.
She warns of risks associated with inflation and market corrections.
What are Emily's predictions concerning the near-term market?
Emily anticipates continued market growth in the short run.
However, she stresses the importance of watching for inflationary developments.
In conclusion, how should investors navigate the current market landscape?
Emily recommends staying informed and flexible to respond to market dynamics.
It's crucial to balance optimism with a mindful approach to evolving economic indicators. In today's episode, we analyze Tesla's performance as reflected in recent market analyses.
Current reports indicate that Tesla is encountering significant challenges, raising concerns ahead of the CPI report.
Recent investigations suggest the upcoming CPI report may lead to increased volatility in the market.
Investors are anxious about Tesla's stock trends that could reflect wider issues within technology businesses.
How is the sentiment surrounding Tesla evolving as we approach crucial market changes?
Current insights suggest that investor sentiment has shifted to a more bearish outlook regarding Tesla's future.
What are analysts saying about the implications of the CPI report on stock movements?
Experts caution that the report could heighten volatility, particularly in tech stocks.
What predictions are there for Tesla's trajectory following the CPI report?
If negative trends hold, Tesla may encounter ongoing pressure, affecting investor strategies.
In summary, investors should gear up for potential volatility following the CPI announcement.
Keeping informed about market tendencies and Tesla's performance will be crucial in these uncertain economic times.
Today, we're exploring an analysis by Michael Every regarding the preparedness of financial markets for upcoming geopolitical shocks.
Michael Every discusses the concerning complacency investors display, which could lead to severe market repercussions.
Michael Every suggests that many investors are underestimating the risks posed by current geopolitical tensions.
He argues that this complacency could lead to significant market disruptions if a geopolitical event occurs.
What events does Michael Every identify as potential triggers for market volatility?
Every highlights that developments in regions like Eastern Europe and Asia could lead to significant disruptions in global markets.
How does Every view the current attitude of investors towards the potential threats?
Michael Every expresses concern that market apathy could prevent investors from recognizing looming risks.
What strategies does Michael Every recommend for investors during these turbulent times?
Every advocates for a cautious assessment of portfolios and suggests being prepared for sudden market shifts.
What does Michael Every predict about the impact of geopolitical risks on markets?
Every anticipates that we might see unforeseen corrections as geopolitical situations evolve.
Michael Every concludes that maintaining vigilance in the face of geopolitical risks is vital for investors.
He encourages viewers to stay informed about global events and regularly reassess their investment strategies to mitigate risks.
In today's episode of Eurodollar University, we'll examine unusual recent movements in the bond market as discussed by our unnamed financial expert.
The expert's analysis raises important questions about the trends we're witnessing and what they could mean for economic conditions ahead.
The financial expert emphasizes that current bond market volatility is indicative of broader investor uncertainty.
In fact, Jeff Snyder notes that this unpredictability in yields could signal underlying economic weaknesses. The financial expert points out that the unusual movements in bond yields are raising alarms for potential risks among investors.
Additionally, Jeff Snyder stresses that these fluctuations could imply deeper economic concerns. According to the expert, rising uncertainty may prompt investors to reconsider their asset allocations, favoring safer investments.
Jeff Snyder adds that the recent behavior in the bond market could drive cautious strategies among investors.
The financial expert predicts that if this volatility continues, we can expect further instability in the bond market.
Jeff Snyder echoes this sentiment, foreseeing that the implications of these movements may not just influence bonds, but could ripple through equity markets as well. The financial expert concludes that investors need to stay vigilant and adjust their strategies in light of emerging bond market patterns.
Moreover, Jeff Snyder emphasizes the importance of keeping informed about evolving economic indicators to navigate the uncertain landscape.
Ultimately, proactive financial planning will be vital as the market continues to evolve. Today, we're taking a closer look at a perspective from Peter Schiff regarding the state of the economy, particularly the looming threats of a market bubble.
According to Schiff's analysis, the current economic environment is concerning, posing significant risks.
Peter Schiff emphasizes that many sectors of the economy are overvalued, which could lead to a significant correction.
He argues that the enthusiasm we see in the markets isn't based on solid fundamentals. Schiff raises concerns about the dollar's declining purchasing power, arguing that this trend could accelerate.
So, are inflationary pressures becoming a larger concern?
Absolutely. Schiff indicates that as inflation rises, the dollar's value continues to erode.
What does Peter Schiff suggest about the current market conditions?
He suggests that we are nearing an economic bubble, fueled by unrealistic market optimism.
Given his perspective, what strategies does Schiff recommend for investors?
Schiff advises diversifying into protective assets that may withstand downturns.
What does Peter Schiff foresee for the market in the coming period?
Schiff predicts volatility ahead, with possible losses affecting many investors.
Schiff ends with a critical reminder: investors must remain vigilant about changing economic conditions.
He stresses the need for continuous monitoring of policies and adapting financial strategies accordingly.
Today, we analyze equity market trends for 2025 with insights from Emily Brown.
Emily highlights critical factors that could reshape investor strategies next year.
Emily Brown raises concerns about rising treasury yields affecting stock valuations.
She suggests a brewing caution among investors as they reassess their strategies.
How does Emily Brown describe the effect of rising treasury yields on equities?
Emily notes higher yields raise borrowing costs, impacting sensitive sectors like technology.
What does Emily Brown say about current investor sentiment?
She mentions many investors are holding cash as a hedge against market volatility.
What predictions does Emily Brown share for equity markets?
Emily expects corrections of 15 to 25%, with ongoing volatility.
Emily Brown encourages portfolio diversification to manage downturn risks.
She also emphasizes the importance of focusing on inflation-resistant assets amid volatility.
Wow, what a wealth of insights from our expert guests.
Indeed, we heard from Emily Brown, Peter Schiff, and others, each with their pivotal views on market conditions.
I found it particularly striking how they all agreed on the importance of investor sentiment.
Right? But their predictions diverged. Emily is optimistic, while Peter warns of a looming bubble.
And Michael, every pointed out the complacency regarding geopolitical risks. That truly surprised me.
Absolutely. Those differences provide a nuanced understanding of current market dynamics.
If you enjoyed these discussions and want to stay informed, please give us a like and subscribe.
Your support helps us deliver more insightful conversations that enhance your financial acumen.
Don't miss our upcoming videos where we'll dive deeper into financial strategies.
Thank you for joining us, and we'll see you next time.